In this lesson, we'll cover the general principles of insurance policy interpretation. A separate lesson provides additional detail about interpreting unclear policy terms. Assume a car owner bought an insurance policy that stated it covered direct losses to the car resulting from accidents. A tree fell on the car. The insurance company paid to repair the car. Even though the car was fully repaired, the car's market value was less than if the car hadn't ever been damaged. The owner argued that this diminished value was a direct loss from the tree accident and thus also covered by the policy. The insurance company argued that another section of the policy limited claim payments to only the costs of repairing or replacing the car itself, which meant diminished value wasn't covered. What did the policy actually cover? For starters, it's helpful to recognize that insurance policies are in a special category called aleatory contracts. The name comes from the Latin term aleator, which means dice player. In an aleatory contract, at least one party's performance is contingent or dependent on the happening of a future fortuitous or chance event, like the outcome of a dice roll. For instance, in the disputed car insurance policy, the insurance company didn't have any performance obligations unless and until, by chance, an accident happened. In an aleatory contract, even if one side initially misunderstood the agreement's terms, once the future event has happened, it's too late to renegotiate the terms. It would be like trying to renegotiate the terms of a football bet after the game is over. In our example, the car owner couldn't buy a new policy that covers the car's diminished value after the tree had already fallen. These circumstances create the framework in which aleatory contracts, including insurance policies, are interpreted. Next, it's possible, but uncommon, for an insurance policy to be formed by two sophisticated parties with similar bargaining power who fully negotiate the policy's terms. More commonly, the purchasing party has less knowledge, sophistication, and bargaining power than the insurance company.